Welcome to State of the Biz by New York Festivals. I'm Paul Marobella. On this episode, I sit down with Eric Bertrand, CEO of ModUp. Most agency CEOs, including myself, grew up in the business. He came up in private equity, evaluating operators, allocating capital, sitting on boards, and then decided he could do it a better way himself. He's building something really special that this industry rarely sees: a PE engineered, acquisition driven platform that's quietly landing Fortune 50 clients at 500 people. We get into why PE is flooding into the agency landscape, why B2B is the most underrated growth play in marketing right now, and how AI is about to blow up the way buyers even build their vendor lists. This conversation hits different. Don't skip it. This is State of the Biz. Let's go. Eric, welcome to State of the Biz.
Hi, Paul. How are you?
Yeah, I'm really happy to have you. This is going to be a great conversation. I've been looking forward to it. I think why I've been looking forward to this conversation is because you're not the typical agency CEO. I have, a lot of folks that sit, on the other side of the camera, and, and including myself, where we've grown up in the business, right? Running smaller agencies, mid-sized agencies, and then bigger agencies. You've come at it from the private equity perspective where you've been investing in platforms and now you're operating. And I find that to be incredibly interesting. And I think the marketplace will as well. So I would like to spend a little bit of time on that. And as you've spent time on the other side of the table, allocating capital and sitting on boards and even evaluating operators, and now you're an operator yourself, constructing a really cool model and a really cool platform. What did you, what about running the platform from your perspective did you expect, and what has been something maybe you haven't expected about actually operating and building a platform from this side of the table?
Well, yeah, I think it's a really interesting question because I have seen a lot of different companies in a lot of different areas. So, uh, companies that were technology related, from a SaaS companies, or internet, mostly in the internet 1.0 area. And so this is obviously a people business. It's a service
Mm-hmm.
business, and it's super important that you focus on the people side of the business versus when you're in a tech company where, yeah, of course, there's talented people there, but it's not the kind of quantities of people that you have here.
Mm-hmm.
And so I think that that's probably been the part that is the most, it takes most of your focus. You have to
Mm-hmm.
really focus on the people side. And when you're acquiring a lot of companies, as we have, it is even more so because now you have to take companies that are smaller or that have had different histories and different paths and kind of bring them together. So it's really, it's kind of taken, the good part of it is that I've used a lot of my skills from the private equity venture capital world when it comes to whether it's M&A activity or
Mm-hmm.
whether it's financings, working with private equity investors or the banks, and those types of constituencies. So that's been really helpful and great. And I think that is one of the areas that a lot of folks that are in this business that are CEOs haven't historically had that experience because they came up through this business. So I
Right.
think there's some benefit there. The negative is I haven't come up through the business. So there are things that I have not done that some folks, and so I've really had to make my team that surrounds me, people that have had those experiences, that have had a lot of years in this business and understanding the nuances. And then I think we've added the financial sophistication and
Mm-hmm.
some of the technology, which the benefit of being a venture capitalist, which I had been in my past, allows you to take the technology aspect and kind of understand, look at where the world is going from a technology perspective, and
Mm-hmm.
how do you take advantage of that and invest in it.
Yeah, I think there's two interesting things about what you said there in terms of, I don't know that private equities had a reputation historically on being people focused, right? I think it's been value extraction focused and,
Yes.
exit runway focused. And
Yeah.
how do you reconcile that, right? Because I think, we'll get further into the structure of your cap stack, but that's something that's always been interesting to me. Having been in, PE backed businesses, obviously the focus has been on exit strategy versus people strategy and culture, which in our business is huge. And I think
Yeah.
as technology's changing, the second part of my question is balancing people and technology when the conversation has been more about technology, but including in the businesses that I lead, how do you keep a culture while you're also integrating technology?
Yeah. Well, I think that private equity in general, there's different firms, right? Different types of firms and different
Mhm,
types of private equity investors. I think generally the big ones are the ones that have that type of um, kind of what people think about them, right? They view them as being these larger companies come in, they cut costs, they cut people, they try to create value from just financial engineering, and that is a big part of the industry, and it's a negative because
mhm,
generally speaking, it gives a negative connotation for what the industry is. We were both in the venture capital world, right? So we were investing in startups, high growth companies, companies that were adding people left and right. I mean, we created. I had about 30 companies that we invested in over a period of about 10 years. And those companies were all high growth companies. So we added literally thousands of employees, billions of dollars of revenue, and there was no cuts or no kind of financial
yeah,
engineering in those kind of
yeah,
companies. It was just purely how do we grow? How do we focus on where technology is growing? How do we drive value for the business, adding people, adding culture, et cetera. And then I was also at a private equity fund, and that private equity fund was a growth private equity fund. So it
mhm,
wasn't a typical buyout fund where, yeah, you would go in and do some financial engineering, try to reduce costs and staff.
mhm,
It was more of a growth fund where we were investing in companies that were growing and needed capital to expand and grow. And we would be a minority investor in those businesses for the most part. We did have a few where we were also majority investors, but it was a little bit of a different model. So from that perspective, yes, the industry has a connotation that is somewhat kind of negative and anti growing and at it, from a people perspective. I think a lot of the mid market funds and funds that have invested in agencies these days, of which there are a bunch, right? There are a bunch of them. I think a lot of those are more on the growth side too. They're
yeah,
focused on growth, focused on how do you drive the business forward. How do you use technology as a competitive advantage, et cetera, in some cases. And so I think, your second part of that question, which is about how do you integrate technology and try to keep the culture and those kind of things, and that's pretty tough. I mean, I think this industry, and again, I've been part of it for about almost 20 years now, so it's been a bit.
yeah.
But the first company that I bought after I left my institutional private equity venture capital firm was a post production company, and that post
Oh, wow.
production company focused on film to tape
Mm,
transfers and tape to tape
mm.
transfers and all those
Yeah,
things, right? In New York City on
yep,
45th Street,
yeah, wow,
and we bought it out of bankruptcy, and I went in to run it, and the technology obviously changed, right? So that
yeah,
company
change.
today doesn't exist because everything's digital, and you
Mhm.
don't you don't shoot film, you don't have to do film to tape
Yeah,
transfers. You
right,
still have to do
right.
color. You still have to do color correct here and there,
Yeah, of
right? Color
course.
correct is
There's still
still a thing.
post. Yeah.
Yeah, there's still post, but it's not that same business, just wouldn't exist anymore. And so things have changed. So this industry in general has had so much technology change over the years, whether it's, desktop publishing, whether it's, digital, whether it's social, whether it's mobile, digital media, et cetera. Right. And I think that now is no different. Right. So we've had to really focus on training and upskilling and letting people know kind of where we believe the world is going from a technology perspective, and trying to drive people to understand that it's part of their evolution. It's the next evolution. It's the next technology evolution, just like
Mhm.
there's been many before. It's the next one. In this particular case, it's just happening way faster than those other technology changes occurred. I think the red camera was introduced in, I think, like 2000, probably 2010 or 11 or 12. And then, you really people weren't shooting full digital until
Yeah.
later, 5, 6, 7 years later.
Right.
Here, OpenAI and Anthropic launched with less than, 2 to 3 years ago. So it's just happening much faster.
Yeah, then we have full AI agencies, which we can talk about in a second. I mean, having been an operator myself for 30 plus years, I mean, there's always been huge margin pressures on our industry, right? I mean,
Oh yeah.
it's the holding companies have a little bit of a different, maybe a different perspective in that if you don't deliver 15 plus EBITDA, you're out as a CEO, right? If you don't do it two quarters in a row, and there's always been lots of margin pressure on us, and with salaries increasing and costs going up, and I try to reconcile that with PE's perspective on that, right? Because it isn't necessarily a fast growth industry. hyper growth industry. It's kind of a slow burn procurement, getting more and more involved over time,
Oh,
baselining our
yeah.
pricing. Why do you think there's been so much interest from the private equity world in our sector recently?
I think that I think from maybe a diversification perspective, there was only so many industries where private equity can invest, right? You can only have so many HVAC companies,
Right.
which is like and
Yeah,
they love recurring revenue, and they
that's
love
true.
companies that work with larger corporations, of which many of the agencies do. And so I think that when you had, in particular, in during COVID, the digital media and performance marketing space really kind of exploded.
Yep.
And at that moment, a number of mid private equity firms invested in the space and bought
Mhm.
companies. So I think that was a little bit of an impetus where it was the world may be changing
Yep.
because of COVID, which it obviously has, but maybe not. Who knew where that was going? But I think people said, well, this area of having that performance marketing expertise was a really important aspect of where the world was going at that moment. And so you had a lot of investment there. So there was a lot of investment there. There's been a lot of investment in companies that were at scale, larger companies that were able to grow in various ways to try to then become larger mid-market brands. And then ideally they would be either sold to a strategic or they would go public. And I think you saw some of that. Maybe some of that was a little bit with S4 after
Mhm.
Martin Sorrell left WPP and went over
Mhm.
to S4 and then did some of that. So there had been some precedence for it. The holdcos themselves had kind of slowed down a little bit on
Mhm.
M&A
That's true.
because they had done so much for so long, and then they
Yeah.
kinda had to digest it all and change, and and so I think that that might have led to, okay, well, now there's opportunities there, in the capital markets for that. So, I think it's a number of things, but there is a significant amount of private equity in the space. There's a
Yeah.
lot of companies backed.
So let's talk about ModOp a bit. I think the folks listening to that listen to this podcast, whether they're in our industry or CMOs or even talent,
Yep.
may or may not have heard of your company, and this is the opportunity to talk about it a bit. Let's start with the value proposition. If I'm a CMO on the other side of the table from you, and I'm sitting across from you or your leadership team, what is the value prop? What are some things you can genuinely value you can create from me, maybe that a specialist agency can't, or maybe that a holding company won't?
Yeah. So I think that about 10 years ago, I kind of felt that similar to other industries that I've seen, where you would have specialist,
Hmm.
group specialist teams versus having a group that can do multiple things. I felt that we were getting demand from some of our clients, and it just seemed to make logical sense to me that we would be better off if we had multiple services that we could provide to the clients that we had relationships with. We really truly believe in partnering with clients, and so we want to do what's best for them. We never wanted to if we had I use the analogy if you go to a restaurant and they only have tomato soup and you just don't want tomato soup, but that's all they're pushing, like get the tomato
Hmm.
soup, it's the best. Then you're only pushing that one thing, and it may or may not be the best thing for the client, or for that case. And so I just felt like for us to be able to add value by getting true experts in the areas that our clients, basically all the service offerings that a client would need, it made sense to me. And so there's two ways to get there. You can get there through acquisition, or you can get there through
Yep.
organic growth.
Yep.
And as you just mentioned earlier, organic growth can be hard. It's
It's
really
really
hard
hard.
because you
Yeah.
have the team and the case studies and everything in it,
Credibility.
before
Yeah.
any business. And so
Yeah.
you can hire these teams and you can hire a bunch of people, and then it may the revenue may come, it may not come. It's hard. You have to make a significant investment. I felt the best way to do it was through acquisitions, through acquiring companies that are true experts in their areas, integrating them into our model so that it is truly a one ModOp integration model, and
Hmm.
being able to provide those services. So when you have a great relationship with a client and they say, we need, SEO, or we need a website, and we're doing creative for them, we can do that. And we don't have to outsource it. We don't have to bring on contractors. It's internal folks. We have that client partnership. We call client partnership account services person that oversees the relationship. And we just felt like it was the way to provide more value, have less handoffs, have more better ROI potential for these clients, and be able to really drive our partnership with them. And that's really what we've done. And
Yeah.
we've had great success at it. Our clients, we have amazing clients. We have a number of
Yep.
Fortune 500 clients, many, and we have a number of mid-market challenge, either mid-market brands, challenger brands. And many of those clients we've had for very, very long periods of time. We've had some of our clients for as much as 30 years. And so our retention is extremely high. So when we work with a client, we tend
That's great.
to not change. So it's really worked well. We've continued to add services, a number of them over the last 6 years. We've done 12 acquisitions in 6 years, and it's almost seven, I guess now. And it's worked out really well for those services. And then we've been able to overlay technology as part of that enhancement. So it's really bringing the human expertise and
Hmm.
creativity and to bear, and overlaying a technology across all of these different executions.
And you have some great brands in your portfolio. I mean, Nestle,
We do.
Duracell, some brands we even have in our portfolio,
Yeah,
at WPP. You sit alongside us there. Is
yeah.
there a client assignment type where ModOp is genuinely the best option in the market for? And is there a client assignment type that you would say probably isn't a fit, for the platform?
I think that if you need multiple services and you don't want to have six different agencies or four different agencies to deal with
Hmm.
it, we can. That is where we excel.
Hmm.
We are obviously cost competitive because we don't have that extra overhead across all these different executions. We're really good at servicing those clients and making sure the ROI is there and putting the right, going after the things that make the most sense for the client. I think those are our best options. We also have relationships where we kind of sit below the holdcos, right? So
Yep.
we're not competing generally with the holdcos because they're
Yep.
these monolithic AORs, and they're
Yep.
huge engagements. Where we do well is where we sit below them, or I would say about half our business is B2B. And so in a
Yep.
B2B perspective, we're actually really good at B2B, and we can handle anything that they need. And actually, often, because they're not marketing led organizations, we can try to bring some things to the table that we think will work for them that they may have not done before or haven't tried. So I think we kind of sit below the holdco, and I think we definitely bring the overarching look at what a client needs rather than just an individual point solution.
I think B2B is underserved, actually. I mean, it's been I was in a B2B agency at one point in my career. We won Agency of the Year from Ad Age, and I think it's an incredible segment. And it
Yep.
definitely is underserved by the whole coast, but I think it's
Yep.
underserved overall. Huge growth, lead based, right? Lead generation based, full closed loop, which is different than
Yes.
CPG. Can measure the transaction. Technology plays a huge role there.
We love B2B. I mean, it's a at the end of the day, I always it's not necessarily, you're not gonna have a Super Bowl commercial, right? With the
I don't
with some
know.
of the
I
products.
mean,
So
you see, maybe I don't
some of the
know.
products,
Yeah,
but it's so creatively, people tend to be, a little bit of poo-poo the B2B, but I think they're great. I think it's amazing. We and brand has become more important on the B2B side. If What's happened is over time, really, and we've seen this from both Gardner and Forrester, that they've done recent surveys, large surveys to B2B clients, that if you are not part of the initial vendor um, group that folks are looking at when they're going out to find a service or a product, 90% of the time you're not going to be selected, right? You
yeah,
have to be part of that initial group, which means your brand has to be strong enough that
Hmm.
they know that you should be part of that initial group before they even pick the group. And we felt we now, and that's coming into things like GEO, right?
Hmm.
So now we're getting a lot of opportunities in GEO because people are saying, well, how are you finding that initial group? Well, one of the ways is you're going to your LLM of
right,
choice, and you're saying, Here's what we want to do. And here's the type of vendor we want," and those types of things. And if you are not on that initial list, then you're not going to be chosen. It just doesn't, they
yeah,
don't go outside the list. And
right.
that's what we've seen. And so for us, helping them to build brand, to build their awareness on the LLMs, to set up a GEO program, those things are really where the importance is these days. And there are so many B2B companies that the old sales model of just having their sales folks on the ground and going out to trade shows, which they still do, and dinners and those kind
Mhm.
of things. But the
Yeah.
way the world has evolved, where many of their potential customers aren't in the office, so they have nowhere to
Yeah.
go visit anymore, right? And so it's only in those certain scenarios. So they need to find these other ways to make their CRM more effective, to allow you to have data where they can use
Yep.
that data for personalized outreach on the creative side. It's just become a little bit of a different world, in my opinion, for the B2B companies, and we love it. We love helping them. We love being it. We've some of the stuff we've been doing recently is really interesting from a technology perspective, and being able to truly differentiate these folks through the from their client from their competitor set.
We used to say back in the day that creative can still be sexy in B2B. It
Yeah,
doesn't you don't
it can.
necessarily just have to work on a Coca-Cola to have sexy creative. I think
Yeah,
and we've seen some of that, right? I think even the GoDaddy work, which is B2B,
yeah, that's true.
right? I mean,
That was fun. That was fun
it
in the early days. Yeah.
yeah, yeah. They did a Super Bowl spot this year, so it's
Oh, did I didn't I missed
yeah,
that one, but
yeah,
yeah, yeah, we were actually, it's funny because I was an early investor in the predecessor to GoDaddy, which is called
yeah.
register.com, as one of
Right.
the first domain registrars, and that was before GoDaddy ever existed. And so it was early on in that industry.
So full service, has been the promise. Certainly, it's the promise of the holding companies, promise of roll up integrations to create platforms. And in my experience, and I've worked mostly in multi agency, multi services businesses. There's always the seams, right? There's always the handoffs between agencies or creative and media, strategy and execution. Some of them can be P&L limiting, some of them can be culture limiting. How have you mitigated that in the ModOp platform to kind of, make this a seamless, full service integrated experience for a client?
Yeah, so that's been the trick is to have a we believe that client partnership leadership of each client, so that you have someone sitting over the entire process. They are at the end of the day, those folks are advocates for the client in house, right?
Mhm.
And they're making sure that that the quality is there, that the deadlines are being met, that we are delivering things in a cohesive manner, and then bringing in the right folks as necessary to fill in some of the gaps if there are gaps. And so we just believe that, and every time we acquire a new company, obviously that is a new is a new service that we have to bolt on to
Right,
what we're
right.
doing. And so we just acquired a company in September that's focused on marketing automation and data. And it's interesting because they were kind of set up in a way that allows us to really connect what they do to some of our existing clients pretty easily. And so I think we've added 14 clients with their services since September.
Wow,
And I've got
wow.
another 17 in the pipeline. Some are new clients, some are new growth clients that we've added. Some are existing clients we've added, but we've been able to do that again through that partnership model, and bringing them
Mhm.
to the table, and then having them make sure that our folks understand what they can do, what their services offerings are. And it just happens to be at the moment that data and marketing automation and martech stacks, et cetera, are a big area of importance right now for a lot of companies. And so it's just resonated really well, and it's been going great. It's been going really well.
Yeah, it sounds like you're filling a nice position in the market, right?
Yep.
That feels like, you have your smaller, because there's been a swing back to independent
Yes.
because of what's been happening at the holding company level with mergers and transformations and
Sure. Yep.
there's been a swing back to, I would, call them independent creative agencies that really just kind of focus on the big idea, and that big
Yep.
idea can then get activated by other agencies. But it seems like you're filling a nice position in the market between the big holdcos and even between some of the smaller independents.
Yes. Yeah. Yeah, I think what's driven us here to some extent is the technology, right?
Hmm.
Technology is kind of driving us to a point where you want to have connectivity between everything you're doing. And
Hmm.
so if you have 8 different agencies and they're all on different platforms and they all are doing things in a different way, It's harder. It's possible, but it's harder to connect all of that together from a technology
Right.
perspective.
Right.
So we've built an AI platform.
Yep.
We built it over a year ago, about 18 months ago, and it's a different concept than what the holdcos have built. The holdcos have kind of built these monolithic systems that have all the data from all, which is great. Like that's their proprietary bend at the world. But you kind of have to plug into that. And the way we've done it is started from the bottom up, which is what does the client need,
Mhm.
and what do we have that other people don't have? And that's the massive
Mhm.
amount of expertise and experience with these clients. So we
Mhm.
kind of bring that to the table and we use that with our AI platform to input what makes the most sense on a proprietary basis for the client, which, some of which may be similar to what we've done for other clients. So we're not
Sure.
starting from scratch in each implementation, but it allows you to have that connectivity in a think about it as a big circle, right? So that wherever you enter, it's a highway that's a big circle, and wherever you enter the highway, whatever a part along the circle, it doesn't matter because that data is flowing throughout that circle, throughout that highway, and you can use that data in whatever other execution you need to. And every time you plug something else in, it gets stronger and more
Mhm.
valuable and better, and
Mhm.
provides better ROI, and it allows you to really drive what I believe personalization,
Mhm.
significant personalization, and taking advantage of the tech, in some cases tech debt that these folks have invested in over the years, and now you can actually pull ROI from it because you are able to then enhance it with all these different data sources from different service offers and different executions.
Yeah, I think obviously, Publicis has Marcel, Omnicom has Omni. We're building
Omni,
WPP
yeah,
Open, right? Like,
agreed.
so there's significant dollars
Machine
being
from the
invested.
machine from Stagwell, yeah, it's
Yeah, yeah. And as we talk about the value creation for the platform, it's actually forcing pricing conversations, whether subscription models or
yeah.
outcomes based model versus FTE models. What's your take on that? Because I actually think we're at a bit of an inflection point between what the
Yes.
consultancies are saying, how we should be pricing our services, and what big brands and procurement are ready to accept.
Yeah. It's a big conversation right now, and I think we're in what I would call the messy middle, right? Which
Yeah,
is
yeah.
that there's there's a bunch of things going on and a bunch of folks. There are some clients that are going to stick with what this historical scenario is for a while,
Hmm.
and that's okay. And we're still working with those folks, and we're still working the way that they would like from a historical perspective. There are some folks who are looking at a little bit of a hybrid, and then
Hmm.
there are some folks that are looking to really go to more of what I would call a value based model, which I think is important. It's We are going to be reducing likely the time required to do the set amount of work that we've done historically,
Right,
right? If we used to spend 1,000 hours, we're automating a bunch of these tactical things. It's going to be 700 hours or 600 hours or
right,
500
right.
hours. It doesn't mean that we're not still creating value because
Sure.
in reality, some of the things that we're doing are now taking some of those hours and transitioning to more strategic, more creative exploration instead of just doing a tactical thing that wasn't really creating a lot of value to start with. So I think we have to move away from kind of just the pure hourly model and to more of a value based model. And if you're able
Yes.
to, we talked to a client or a potential client a couple weeks ago and gave them a demo of what we want to deploy to their both from a service offering, a human perspective, and from a technology perspective. And it could literally generate hundreds of millions of dollars of revenue for them. And so, you know, and if it was just on an hourly basis, maybe it would only be,
Right,
$100,000 or something.
right.
But the value that we're creating is massive. And it's because we're using a combination of our expertise, our experience, and our technology and the human side of this to drive where that technology can go and where it can drive their business. So obviously it's more than just the hours. So I think you're going to be seeing more transition to a more value based relationships.
I mean, to position as a growth partner and then to charge on FTE and hours is incongruous, right? We need
Yeah.
to, if we're going to be a growth partner for any brands, depending no matter where we are on the scale, taking like a consultancy would do, which is
Yes.
outcomes based. I mean, I think we're moving in that direction. But you talked about personalization, which technology really allows us to do from a content perspective, right? Hyper personalization based on the
Yep.
segment, based on signals and triggers of from a data point of view, and then being
Yep.
able to show incremental lift on
Yep.
versus personalization versus non-personalization, which is a powerful tool, and AI is helping us do that, of course.
Yep. No, I
Um,
think that's
yeah.
where, yeah, I
Oh,
think
go
that's where we're going. I think personalization is from, especially from a B2B. I think B2C is going to take a little bit more time because we
Yeah.
just have to, there's a lot, a lot more data, a lot more folks that you're trying to reach. But I think from
Mhm.
a B2B perspective, it can happen right now. And actually it's an area that we are employing in certain, client relationships right now.
The other part that we're all trying to solve for is the agentic layer, and you've talked about your e-commerce agents,
Yep.
and we have a lot of co-opetition with Amazon, Google, and Meta, and other platforms that are also building these agentic layers, probably more in the B2C space.
Yeah.
Um, do you think this is a race to the bottom? Do you think that those platforms will tend to overtake the agency landscape? I mean, how are you thinking about your agentic layer as it relates to creating value?
So I think it's when you look at the amount of, if you look at things that are very uh, large and monolithic, I think those are the areas where I would be the most concerned, because the amount of money that's being invested by folks like Meta and Microsoft
Yeah,
and Google
hard to
and
match.
I mean, OpenAI just raised $120 billion in a private round. It's the largest round that's ever been done in the history of the world. And if you take and just to kind of level set that, if you take the market cap of all six of the largest holdcos in this industry, it's about $60 billion. So OpenAI just raised twice the market cap of every holdco combined in one round of financing.
It's crazy.
That's unbelievable. So if you just kind of think about, I would not want to be in the I would not want to be trying to compete against companies that are raising hundreds of billions of dollars. It is impossible to compete against them and that have hundreds of millions of dollars or trillions of dollars of market cap. I think that what Meta's doing, and again, I'm sure they're doing a lot of stuff in the background that we don't even know about, with stuff that Apple and Microsoft and Amazon are doing are significant. I think that what they're trying to develop is, though, to go to the masses. So if you're
Yeah.
trying to compete against that, it's going to be hard. I think that if you were talking about very specific solutions for companies that have specific business issues or business goals, that's where I think the value is, and that's where I think you don't have to worry as much, right? Like Amazon is not going to build a point solution that is very specific to a company. They're going to create a solution that's like, hey, here's a solution you want to get to all the 20 to 30 year olds in a certain income level in a certain area. We just tell us and we're going to go. We're going to get them.
Yeah.
We're going to go get them. That's like a different model than if somebody's trying to, work with uh Electronics Weekly publisher and semiconductor magazines, or farm equipment, events and those kind of things. Like that's something that's way more personalized, way more specific to a industry and to a customer than maybe what these guys are going to be focusing on. So I think that's what we've been trying to do, is trying to focus on the things that are much smaller and personalized, rather than these big monolithic things, which are going to be I don't know where they're all going to go.
Yeah, it makes sense. I mean, it's an interesting time because I think there's a bit of an identity crisis in. I mean, I love this business, but I think there's a bit of an identity crisis happening where we're being forced to be technology companies, and to your point,
Yes.
competing with the pure play technology companies is almost impossible.
Oh,
But our superpower, for some more than others, is creativity and how we can leverage technology and creativity in client service. I mean, Adobe is
yes.
another one, right? There, it's co-opetition.
Yes.
They're a huge partner of ours, but they're also competitors. But they're a
Yep.
software sales business, not necessarily a creative business. And I think over the next 5 years, we'll see how that will all come together.
Yep.
There might be some services that get removed from our side, but then we can fill the gap with others. It's just a really unique time to be in this business.
Yeah. I mean, another example would be, let's say, Salesforce, right? So
Right.
Salesforce Cloud, right? You have a lot of power and agentic technology going into Salesforce Cloud. But if you're a company and you want to be able to do various things with your data and connect it with your ERP and your client facing portal and your events and your social media and all these things, then you don't want to have all your data in Salesforce Cloud. You don't want to have everything connected through that, because then you're beholden to what they will allow you to do and what that ecosystem is designed for. So yes, you want to still have Salesforce as a partner as you would Adobe and others, but you use that as also another technology provider. And then I think you still need to have that, to your point, technology in the middle of it that is a more proprietary technology focused
Mhm.
on your business and the way your business operates, that is likely coming from a company, whether it's us or another, marketing advertising company that is acting a little bit more like a technology company than
Yep.
just a pure marketing advertising business, for sure.
So what's the next 24 months look like for Mata? What's your, what can you tell us about your strategy and where the market's heading for you?
Well, we'll continue on the acquisition lookout for folks that would add value to us and have
Mhm.
great client relationships. We That's what we kind of focus on, companies that have at least one Fortune 500 relationship where we know that they can really deliver at a very high level. They would need to be had that relationship for more than just a few years, right? We like long term
Yep.
relationships.
Continuity,
Usually size range 25 to 100 people. Usually, kind of, you look at our revenue
it's your sweet
somewhere
spot.
in,
Yeah.
yeah, kind of, that's a sweet spot, 5 million to 15 million of revenue. And there's many companies that do fit that profile. We do see a lot. I mean, I've probably seen 400 different opportunities over the last 5 years, and we've invested in, and we've acquired 10. So it's it's a pretty big vetting process. But I think that we'll continue that down that path. I think that the we've added a bunch of new logos, and some of the logos that we've added in the last, I probably can't say, but they're amazing logos. Like, we've already got some amazing clients.
You do.
I love our logos, and we've just added, like, in the last week, we've added three new
Mm,
ones, which is
amazing. Congrats.
Fortune 50 companies. And it's interesting because we aren't that big. We're not a holdco. We are, 500 people. But I think that because the technology is a little bit level setting, doesn't have to be your size, isn't, you have to be big enough to invest in technology and to drive value through technology, but you don't have to be huge in order to
Right.
provide you using that technology. And so, because of our expertise, our experience, and the human, you know, uh, expertise and value that we have, and we overlay that technology, we've had some really amazing conversations. And I think so that's how we're getting into some of these new conversations, is through what we're able to provide from a technology and human creativity perspective. And I think we're going to continue to do that and expand that. And the more case studies we have that show how we are creating value, how we are
Yeah.
being able
Hockey
to
stick.
drive personalization,
Yeah. Yeah.
and
Yeah.
show that, that's ultimately what will bring us more of that business and more of that work. I think this year, in the last 6 months, now this year, we're going to be focused a little bit on just getting our name out a little bit more,
Sure.
because we've been so busy with existing clients and growing
Yeah.
them, and the acquisitions we've been doing, that we haven't really spent a lot of time on the outside. So yeah, we're not a hugely known quantity from the rest of the market, but we're starting to get known, pretty well. We made the Ad Age A list this year, which is awesome.
Congrats. Yep.
We're doing a bunch of things for outreach to really drive the name recognition. We did sign on with Gardner and Forrester to try to let them expand our brand around,
Awareness.
their
Yeah.
et cetera. Yeah. So that's kind of what we're focused on.
Listen, I think our industry is better off having a player like you in it, and it's really interesting strategies. It sounds so different than a lot of the other players, whether big or small, in the business. And I can tell you, I'm rooting for you, and
Thank you.
um, and we'll keep a close eye on what you're up to, and we'll try to help you, and any chance I get along the way.
Awesome. Well, I appreciate it. It's really, I love our conversations.
Yeah, thank you so much. Thanks for coming on State of the Biz by New York Festivals, and it was exciting to have you.
All right. Thanks,
Thanks,
Paul.
Eric.
Yep.